How's it going today, guys? Welcome back to the channel. So today we're going to be talking about JD.com. It is one of the stocks I am personally invested in, and it is also one of the worst performing Chinese internet or e-commerce stocks right now. As I'm sure we know, the Chinese market is currently selling off hot and heavy. This is one of the worst performing stocks right now, or one that is being hit the hardest. And as of today, they just hit not only a 52-week low, but an all-time low for this stock. This is a company that went public back in 2014, and this is the lowest price this stock has ever traded at, even since their initial public offering. So we are seeing a serious correction taking place with this stock. Now, I've done videos in the past talking about JD as well as my holdings of this company. Personally, I plan on investing another $5,000 into this stock in the next couple of weeks, and if I do decide to do that, I'm going to make a video for sure updating you guys on that addition to my portfolio. But what I want to talk about in this video is their most recent earnings report. Was it as bad as everyone made it out to be? And kind of my thoughts and feelings on this company given this recent quarterly earnings report. Now, before I get into the video, I just wanted to mention if you guys are interested in picking up a completely free stock worth up to $1,000, Webull is currently running a promotion where if you open an account with them, you don't even have to fund it. They're going to give you a completely free stock worth up to $1,000. That's the top link in the description below. It's an affiliate link. You guys do not have to take me up on this offer, but if you want to get a completely free stock, that option is available to you. And if you're not familiar with Webull, Webull is basically like if you took Robinhood and added some more research tools and technical indicators. It's more of a platform for intermediate to advanced active traders than it is for long-term investors. But if that interests you, you can grab a free stock just by signing up. That's down in the description below. But let's go ahead and get into this and start by talking about JD earnings here. So first of all, revenue came in for this quarter at $15.3 billion, and adjusted earnings per share came in at 12 cents per share in our currency here. And that was right in line with what estimates were. So they came right in line with what was expected in terms of this quarter for the top line and the bottom line. Now, where we have bad news is where we see they had 25% revenue growth year over year for quarter three. Now, in my opinion, 25% revenue growth is still very strong growth for a company that is very dominant over there in China. They are the largest e-commerce company in terms of revenue, as far as I know. I don't believe that Alibaba is larger, but if they are, I will add a correction there. But this was what people saw, or what analysts saw as bad news here, because this was the slowest year-over-year growth for a quarter since the 2014 IPO. So, of course, everybody started to panic, saying, okay, we got to pump the brakes. The growth is going to be slowing down. But I still think 25% growth is exceptional growth for a company, and I still would consider this to be a growth beast at this point in time. This is kind of also what has been happening with Facebook. Seeing slower growth has started to concern a lot of investors, but I still see such a large amount of potential for both of those companies going forward. Now, as far as the performance of the stock goes, they were down about 5.5% after market hours after reporting earnings, and then today they were down to an all-time low for this stock. And another piece of news that investors were not necessarily happy with was their growth estimates for quarter four, or their forward-looking guidance. They were anticipating about 18 to 23% growth year over year for that quarter, compared to expectations of 23.5%. And again, Alibaba had to do the same thing. They had to kind of curb their estimates because of concerns of the trade war and also the slowing economy over in China. So they're kind of curbing their estimates as to not shock people if this is the case. So again, these were kind of the negative notes of this earnings report, and that is why we saw that stock go into quite the sell-off. But what I want to do is dive a little bit deeper into this earnings report and talk about the things that I noticed, and personally what I'm excited about as a JD.com investor, and most importantly, why this is making me decide to invest another $5,000 into this company. So first of all, looking at the earnings report here, we saw that net service revenues were up 49% year over year. That is massive growth there in the service segment of their business. Annual active customer accounts were up almost 15% year over year. So you have more people opening accounts with the JD platform and using their services. JD Plus, which if you're not familiar is basically the Amazon Prime equivalent of what JD is offering, so that offers some different services such as free shipping coupons, VIP customer service, exclusive discounts, as well as a premium video content delivered through another Chinese company, IQIYI. I'm not sure on the pronunciation there, but that's kind of like, a Chinese version of Netflix. They have a very nice service there, similar to the benefits that Amazon Prime offers. And in this quarter here, JD Plus surpassed 10 million paying users for JD Plus, which is fantastic. And if you're looking to compare this to Amazon Prime has a little over 100 million paying members. So they've gotten about 10% of the size of the customer base for Amazon Prime, but I think there's a long way to go for this service here for JD.com and JD Plus. Beyond that, we heard they are establishing more relationships with major brands over in China and helping them to take their retail online through JD.com. And what this is doing for them by establishing relationships with these big brands is it's really boosting the credibility of JD.com by establishing these relationships. And it's going to make them the go-to online service for basically selling your merchandise online. We see the same exact thing happening with Amazon, where major retailers are making deals with Amazon as far as having listings of their products on Amazon. I mean, if you can't beat them, then you might as well join them, as they say. And so these retailers, rather than competing with Amazon or JD.com in the e-commerce space, believe it's better to just list their products on these websites. And we're seeing JD.com establishing a lot of relationships with these Chinese companies. Beyond that, what I see as one of the most exciting parts of their business is their retail as a service business. And what we found in this quarter is that they had partnered with a Chinese fashion giant to provide logistics, inventory management, and marketing solutions. And so basically what they're doing here is taking all of their back-end technology, their back-end logistics, and they're basically selling this as a service. They're helping other retailers with logistics and marketing and all kinds of other retail services, and they are selling that as a service. I think it's a brilliant idea, and it's an excellent way for JD.com to, make money in a way that is very different than, just selling products on the JD.com platform. Beyond that, we also heard that JD launched a new retail platform that allows offline retailers to improve efficiency of operations through digitalization, data mining, and visualization capabilities. And that is extremely interesting to me because that shows that the JD retail as a service business works for both online retailers and offline brick and mortar retailers. So JD is offering interesting solutions and services to both online and offline retailers. That is one of the most exciting parts of JD for me, in my opinion, because there's so much potential with this, in my opinion. Beyond that, another huge piece of information we got in this quarter is that JD Logistics is now offering parcel delivery service to customers in 3 major Chinese cities. So JD.com is now essentially becoming what we have over here of a FedEx or a UPS, where we can basically use them to deliver our packages. So not only are they delivering products that are being purchased through the JD platform by their customers, they're also offering parcel delivery for customers who want to ship products. And this is one of the major differentiators between JD.com and Amazon, as well as JD.com and Alibaba. And that is the fact that Amazon is not shipping their own products. They're not handling the logistics. They're just handling the fulfillment of those orders, and then, UPS, USPS, they're delivering those packages. Whereas with JD.com, they're handling both the fulfillment and they're also handling the logistics by delivering those products. And they've built such a massive, efficient logistics network, it is now a logical play for them to be offering that delivery service to other customers for non-JD packages, which again is another very exciting business venture, in my opinion. You're getting almost like a FedEx built right in, or a UPS logistics company built right in here as a JD investor. And then the final piece of information I wanted to discuss from this earnings report is that JD completed a $500 million financing round for a company, and I apologize in advance for the pronunciation. I believe it is Dada JD Daojia, which is a joint venture between companies including Walmart, JD.com, and others, which is offering 1-hour home delivery service of fresh groceries online. So JD is involved in some very interesting businesses, and I see a huge amount of potential in these side bets. And we just recently heard news that the CEO is going to be stepping out of the main business and kind of handing over some of those tasks to other chief officers, and he's going to be taking over operations of some of these side businesses. Now, a lot of people believe that was him trying to get out of the limelight because of the sex scandal, and you may believe that, you may not, but I think it's very interesting. These side businesses, in some ways, are more interesting to me than just their traditional e-commerce business they have going on. But anyway, that is an update here on this earnings report. Now I want to go ahead and talk about my main thoughts on JD.com after reading this report and why I'm going to be investing another $5,000 into this company. Number one, my first thought here is that this is a growth beast trading at an all-time low. And this is really something that I don't understand with people who invest in the stock market. JD is a stock that used to trade $40, $50 a share, and there were people buying this stock left and right at $30 to $50 a share. And I don't understand why you wouldn't buy it at 20 if you bought it at 30 or 50. If you thought it was a good deal at $30 a share, $40 a share, or even $50 a share, why would it not be a good deal at $20 a share when you can get more than 2 shares per 1 share you could have purchased originally? I know it's psychology related. People are afraid to buy stocks when they're trading at a low share price. They're afraid to buy stocks and see them go down in the short term, but it's just something I personally don't understand. The amount of growth this company has experienced in the last 4 years as a publicly traded company, and for it to be now trading at an all-time low, in my opinion, it is an unbelievable opportunity, but a lot of people disagree with me on that. They disagree with me on GE and Facebook as well. But what it comes down to is this is a stock that I personally see value in, and you may not see value in it. I'm just here merely sharing my opinion. Number two, my second thought is that trade war fears and the slowing Chinese economy fears are overblown. I think it's causing a lot of stocks to be stuck kind of in a zone where they're not being able to break out of it simply because of the uncertainty of the Chinese economy. But personally, I'm happy to see this as an investor because I think there are a large number of opportunities thanks to this fear right now going on within the market. Number three, I think the brand relationships that JD is establishing with Chinese retailers is going to boost the credibility of the platform and really make it the go-to platform for e-commerce, much like Amazon is the go-to platform here in the United States, a very trusted, trustworthy company. Number four, I think the retail as a service business segment has huge potential both online and offline. And that is one of the most exciting businesses they're involved with or ventures for JD in my opinion. Number five, I feel JD Logistics separates them from Amazon and Alibaba. I think it's super interesting and I'm glad to hear they are leveraging their massive logistics network and it's going to be another revenue stream for them. And then number six, I think the innovative retail technologies in the largest e-commerce market makes this a very interesting company to buy. The Chinese e-commerce market is significantly larger than the United States e-commerce market, and being able to get involved in one of the most innovative retail technology companies and e-commerce companies at this valuation seems to be a no-brainer in my opinion. But anyways, guys, those are my thoughts and feelings on JD.com at this point in time. Like I said, I plan on adding another $5,000 to my JD.com stock position. If I do decide to do that, I will absolutely do an update video and let you guys know about that. But that's going to wrap up this video. I hope you guys enjoyed it. Remember, if you want to grab that completely free stock, that's going to be the top link in the description below. But let me know in the comment section below what you guys think. Are you buying JD.com? Are you selling it? What are your thoughts and feelings on this stock? I would love to hear what you guys think. But thank you so much for watching this video, and I will see you in the next one. I apologize on my pronunciation here. Dada JD Doja. Doja.